Now that the FCA has lifted a ban on crypto ETNs, it means that investors in the UK can gain exposure to Bitcoin and Ethereum, and that means they're high-risk products and they're subject to stricter rules around promotion, suitability and consumer protection. So there's been a significant change in the regulation of investments in the UK, which means that more people will be able to have access to crypto, so Bitcoin and Ethereum, within their portfolios via mainstream investment platforms. So what I'm going to do is explain what's changed, what the rules were before, and then go on to explain how people can gain access. But more importantly, I'm going to explain the risks associated with this. So back in January 2021, the FCA banned the sale, marketing and distribution to retail clients, so people like you and I, of derivatives and ETNs referencing unregulated transferable crypto assets. So the regulators' rationale at the time included concerns about extreme volatility, the lack of consistent valuation methods, market abuse risks, and the low likelihood that many consumers could reliably assess these complex instruments. So on the 1st of August 2025, the FCA, which is the UK finance regulator, formally announced that effective from the 8th of October 2025, then retail investors will be able to access crypto asset-backed ETNs, so-called CETNs. Now, an ETN is an exchange-traded note, and the ones you'd be able to get access to are those listed on a UK-recognised investment exchange. And this change is significant because it means that from the 8th of October, so from now, UK investors can gain exposure via mainstream investment platforms to things like Bitcoin and Ethereum. Now, the FCA described the shift as a response to the evolution of the marketplace. So better maturity of infrastructure, so that's things like custody and disclosure. But the policy also explicitly framed that it was part of the UK's aim to support the growth and competitiveness of the digital asset sector, so things like crypto. Now, firms offering these crypto ETNs to retail customers must comply with strict financial promotion rules and the consumer duty, of course. So one of the most important things to understand is what's the difference between an ETF, an exchange traded fund, which most people will have heard of, and an ETN, an exchange traded note, which I think most people won't have heard of. Now, they're both types of exchange traded products, which trade on exchanges just like shares do, but their internal mechanics are different. An ETF generally holds the underlying assets or a close proxy to them. So if you own shares of an ETF that owns an underlying asset, you indirectly own some of its holdings. The risk is that the ETF may not perfectly mirror the underlying asset's returns, and that can be due to tracking error, it could be down to fees or liquidity constraints. An exchange-traded note, or ETN, is a debt security issued by a financial institution that promises a return that tracks the performance of an underlying index or asset minus the fees. It does not directly hold the asset itself. So now that the FCA has lifted the ban on crypto ETNs, it means retail investors that use them will have this exposure to counterparty risk. So if the issuer defaults, the note might become worthless regardless of how the underlying crypto actually performs. Now, if you're listening to this, you might be thinking, well, why didn't they just do crypto ETFs rather than crypto ETNs? And the reason is because under their current regulatory framework, it is easier to allow the crypto ETNs, because if they were going to allow crypto ETFs, then you've got the whole operational risks and the custodian risks that would need to be looked into under a fund structure. So it just makes it a little bit more difficult from a regulatory perspective. So starting off with crypto ETNs, which just give you the exposure to the performance of the asset, that was far easier. So this is the first step on a journey that may ultimately allow UK investors to gain exposure to crypto via ETFs in the future. Now that brings me to a point where it's probably good to give people a bit of a recap on how most people would gain exposure to crypto now directly versus what happens with the crypto ETNs they can now get exposure to going forward. So typically, somebody who might want to gain exposure directly to crypto would choose an FCA registered exchange. So it could be something like Coinbase, for example. And they would then go and buy crypto via that. They would have to create an account. They'd verify who they are. They would then create and verify their account on there. They would fund that account, and then they would purchase their crypto that they wanted to own. So then they have a choice of how they hold their crypto effectively. They can leave it on an exchange, or they could do self-custody where they move it to a private wallet. There's different choices. You could use a hot wallet, so you could use another software that's connected to the internet, or you could use a cold wallet where you use a hardware device to store the keys offline. Now, we've got a whole podcast that explains how that works and how you might buy crypto directly. I'm not going to cover it in this podcast, so we'll put a link to that in the notes. So what's the difference between gaining exposure to crypto via crypto ETN and buying directly? So in terms of accessibility, with a crypto ETN, you're going to be able to gain exposure to them and buy them via existing brokers, so traditional investment platforms. Typically, if you want to buy crypto directly, then you would need to use a crypto exchange like Coinbase, for example. In terms of regulation, if you buy crypto ETN, then it's a regulated security that's listed on an exchange in the UK, subject to financial promotion rules and consumer duty. If you buy crypto directly, then you might typically buy via a crypto exchange that's got to be FCA registered. But crypto itself is not regulated. Direct assets fall outside many security rules. In terms of ownership, if you buy crypto directly, you own it. If you gain exposure to crypto via a crypto ETN, you don't own the crypto. You own a debt instrument. It's different. When it comes to directly owning crypto, then one of the biggest risks is custody risk. So you're talking about loss of keys, the exchange failing, or hacks. When it comes to fees, there's an ongoing management fee with a crypto ETN. When it comes to direct ownership, there's transaction fees and you might get network fees, for example, but there's no recurring management costs for holding crypto directly. Now, the interesting part is the tax treatment. With direct crypto holdings, you are subject to capital gains tax. So you need to keep records of the purchases and sales that you make. When it comes to owning a crypto ETN, they can be held within an ISA and potentially a pension under new rules. So that makes exposure via crypto ETN attractive from a tax perspective. When it comes to consumer protection, just because crypto ETNs are going to be sold by mainstream investment platforms, it doesn't mean you've suddenly got the Financial Services Compensation Scheme protection against losses. It doesn't work like that. You don't have protection for losses on crypto ETNs. It's no different to if you bought an ETF, for example, or a share. Now, when it comes to direct crypto holdings, there aren't any protections there either, and it's not regulated because it depends on the exchange and the jurisdiction. So what you're really gaining in terms of consumer protection is for a crypto ETN is that the platform, if that were to go bust while you were putting your money on the platform, then you would be covered under the FSCS. It's not to do with the crypto ETN purchase or sale itself. Now, in effect, a crypto ETN marries up two risks. So you've got the volatility and market risk of the underlying crypto itself. And at the moment, crypto ETNs will only allow you to have exposure to movements in the price of Bitcoin or Ethereum. And that marries up with the counterparty risk, which is the risk that the issuer doesn't pay the promised return. So the news that crypto ETNs are now available will be met with probably a great bit of excitement by a lot of people. So people who listen to this podcast, I know there have been lots of people who've written in before about gaining exposure to things like Bitcoin or Ethereum and were put off with the direct route because of issues in terms of understanding how to do it and the risks in terms of custody as well. So there'll be lots and lots of people who will now want to gain exposure to this type of investment. Now, the thing is, it's very, very high risk and it's definitely not suited to everybody. So I really want to reiterate this. And the FCA has designated crypto ETNs as restricted mass market investments, so RMMIs. And that means they're high risk products and they're subject to stricter rules around promotion, suitability and consumer protection. And it means that anyone who wants to invest in them will have to go through lengthy assessments via platforms, and they will also have to not allocate more than 10% of their net worth to them. They'll have to state that they won't. So these sorts of checks by platforms are necessary, and they are a good thing. So for most people who listen to this podcast, these aren't suitable for them at all because they need to understand the risks associated with them. But we would be doing a disservice if we didn't talk about them, because I think a lot of people are very, very excited about crypto ETNs. So if people are wanting to invest, they are going to have to go through some strict onboarding with investment platforms. So it is something that people are going to want to be looking at. And I'm going to pass over to Andy because we're going to move on to the next part of this, or the final piece of this part of the podcast. How do you gain exposure to these crypto ETNs? Because they are now allowed, but how do you actually buy them? Which platforms have already said that they are going to allow these on their platform and for customers to gain exposure?
Yeah, so this is where it's really interesting. And we are seeing various bits of information being fed out from the various platforms out there. And I'll give you just a brief list of platforms which have ultimately given quite a positive response to this and have said that they do fully intend to support crypto ETNs on their platforms. And those platforms are Interactive Investor, Free Trade, Trading 212, and Interactive Brokers. So those are the mainstream investment platforms that fully intend to support these crypto ETNs and allow their investors to invest in them. Hargreaves Lansdown I haven't mentioned yet. They've been a little bit more hesitant. They've said approximately April 2026 as a date where they might be offering them to their investors. So they're just sitting back a little bit on that. And just actually before we move on, Damien, I want to talk about exactly how investors can invest in these tax efficiently. You mentioned through ISAs, maybe pensions in the future, but let's look at ISAs because there's a weird quirk that's going on. Frustratingly, the FCA have made it a little bit more confusing, I think, than it needed to be, because the rules are being introduced in what they're calling a two-stage process. So ultimately, investors should, in the coming days and weeks, be able to invest in crypto ETNs via a standard stocks and shares ISA. But then from the 2026-27 tax year, they're saying that investors will only be able to invest in crypto ETNs via the innovative finance ISA. So it's more frustrating than it needs to be. We're going to have to see this sort of switch over to innovative finance ISAs from the 2026-2027 tax year. I don't know quite why that's happened, but obviously the FCA and the government deem these type of investments to be more like those peer-to-peer loans, which is the reason that innovative finance ISAs came about in the first place.
Yeah, so it is going to be a slightly odd transition. It seems that if you have these crypto ETNs in an ISA before the 2026 tax year starts, and they can stay in there and be deemed innovative finance ISA investments. But if you want to top up your crypto ETNs, you need to do that via a new innovative finance ISA. What it means is that we're going to start probably hearing more about innovative finance ISAs, despite the fact they've been around for years and nobody was talking about them. So the message of this part of the podcast is that crypto exposure is now coming to the mainstream for UK investors. It's very high risk. It's not for everybody. Think carefully about it. And certainly if you do decide to invest via crypto ETN, it should be a very small part of your portfolio. I mean, typically any of these high risk investments shouldn't be more than 5% of your portfolio anyway.